Yeah, good evening, wonderful students, ATS guys. You are welcome to the class. This beautiful evening. Today is 19th day, Saturday, 19th day of November 2022. On a Saturday. You are welcome. So I can see up to three two ladies I thought as much, Elizabeth Williams, Obadari, and Assis Mudunayo. Muturayo. Okay, you are also a lady.
Yes, sir.
So it's a class of ladies. So ladies just want to come and take over this profession from us. They are waxing stronger. All in foundation level, they are there plenty. Skills, they are plenty. Professional, they are plenty. And they used to pack all the awards, all the prices. It's good now. You are welcome.
Yes, sir.
So my name is Cletus Itachon, ACA. I'm billed to be taking you public sector accounting, probably one of two other courses that may come my way. So for public sector accounting, I've broken your classwork into 12. We're likely to have 12 weeks lectures before the exam, 12-week lectures, and after which we do a revision class, probably a mock class. So these are the contents that you are required to know in this course, ATS2, Public Sector Accounting. So introduction to public sector accounting, the constitutional regulatory framework. That is week 1, which is today, the topic we are going to take today. Then the next topic will be standardization of federal, state, and local governments reporting format in Nigeria. That will be our next class. Then coming next will be pensions and gratuity. Next is planning and budgeting in the public sector. Planning and budgeting in the public sector. Then authorization of government expenditure and financial control of public sector revenue. We'll take a look at that. The next will be sources of government revenue through preparation of vouchers. The next will be procurement procedures, inventory management, accounting and laws of government inventory funds. The next is accounting for local governments through preparation of cash book, subsidiary accounts, and monthly transcripts under IPSAS cash basis. So next is preparation of statutory financial statements for governments in accordance with cash and accrual basis of IPSAS. Next is accounting for government business entities, GBEs, financial management control of the government funds. Then next is interpretation of public sector financial statements. Then the last one will be public sector audits to emerging issues and ethical consideration in public sector accounting. I hope you guys are following me. Hello there.
Yes, sir.
Okay, you are hearing me. All right, that's good. I want to be sure. So today's topic is introduction to public sector accounting, stroke the constitutional and regulatory framework. So today's topic is talking about the introduction aspect of public sector. Then the second is 2-in-1 topic matched together, introduction part, then the constitutional and regulatory framework. So what are the documents that is regulating the public sector? What are the documents? What are those documents? What are those laws? What are those regulations that is regulating the public sector? That is another section of this class today that we are going to look into. So the two topics is a kind of matched together because the topics are many. If we are to take them singularly, you will not be able to cover the syllabus before your exam, and your exam is in March. So it's the only way we can go about it. So these are the subtopics. These are the subtopics under this heading, Introduction to Public Sector Accounting, the Constitutional and Regulatory Framework. So these are the subtopics under it. We have introduction, we have nature, objective, and characteristics of public sector accounting. Then users of public sector accounting information. Who are the users? Then we have the concept and principle applicable to public sector accounting. Concept and principles. We have basis of public sector accounting. What are the bases? Then comparison between non-profit oriented organization and profit oriented organization. We are going to tackle it today. International Federation of Accountants, IFAC. So we're going to tell you what this body does, what are their functions. Then International Public Sector Accounting Standard Board. We are going to tell you their functions, what do they do. Then constitutional and legal provision in Nigeria. Then constitutional and legal provision in Ghana. Then we'll take some quizzes. Hope we are following.
Yes,
Yes,
sir.
sir.
All right. So introduction. So the simplest definition of a public sector is that it's an all organization which are not privately owned. Public sector is an organization which are not privately owned and operated, but which are established, run, and financed by government on behalf of the public. It is run and financed by government on behalf of the public. So therefore, it's not owned by a private entity or a private person or a private individual. So this definition confers the idea that the public sector consists of organizations where control lies in the hand of the public public or a private owner, and whose objectives involve the provision of services where profit making is not a primary objective. So in public sector, the profit making is not the primary objective of the business, of the concern. So performance measurement in the public sector is hindered by lack of profit motive. You know, you cannot really evaluate whether a company in public sector is doing well or not, because normally in the private sector, the indices used is profit margin. How much profit margin did they gain? Did they aspire to, or did they achieve? But in public sector, you cannot use profit margin or return on investment to judge whether they are doing well or not. So multiple objective and presence of intangible services whose benefits are difficult to quantify also hindered or make it hard for public sector objective to be examined or to be measured, or performance in the public sector to be measured. So public sector accounting has been defined as a process of recording. We are talking about the accounting now. We've defined public sector as it relates to organization or as it relates to establishment. We are now defining public sector as it relates to accounting. So we can say that public sector accounting is defined as the process of recording, communicating, summarizing, analyzing, and interpreting government financial statements and statistics in aggregate and details. It concerns with the receipt, disbursement and rendering of stewardship on public funds entrusted. So public sector accounting is about stewardship, rendering of stewardship on the funds that has been entrusted into your hands, because the fund is a public fund. So you have to be accountable, you have to be transparent in dispensing these funds. And you have to come and show the accounts, you have to come and show working. How do you do it? You put it bare on the table, everybody sees it. So there's nothing to hide. Because it's a public fund, you have to be so transparent on it. So that is a brief introduction of what public sector accounting is all about. So as I'm moving, if you have any question, you can pause me and ask your question, or if you have any contribution, you can do that as well. Are you hearing me?
Yes, sir.
All right. So if you have any question or any contribution,
Yes, sir.
is that?
Sir, I have a question, sir.
Okay, go ahead.
Does it relate to the rendering of stewardship on public funds?
You said?
How does it relate to the rendering of stewardship on public funds?
Yes, it relates to rendering because a budget is made. First of all, a budget is made, a budget is approved by the National Assembly. Immediately it's approved, it has turned into law, it has become an act. So the public sector organizations are now running on those budgets, those amount of money that is meant to be spent. So at the end of the day, you spend the whole money, January, February to December, you spend in executing projects, building roads, providing light, building water, potable water, public water, or water works and all that, building bridges and so on. So at the end of the day, you have to come back to the people, say, okay, this is the account that I've done. This is the work I did, and this is the account. This is how I dispensed the money that was budgeted for, that was disbursed to me. This was how I expended the money. These are the projects and the project that I carried out in my own department or in my own ministry or in my own agency. So you have to do that. So people will ask you questions. Maybe if you are doing that at the National Assembly, or maybe you are going to defend your budget, or maybe you are doing a new budget, you have to defend the previous one. So they will ask you question. Okay, this is the social project. You said the budget said you should cite the project here in Alimosho. Why did you now go and cite it in Alakpere? So some of the loopholes will be picked and you'll be asked question on it, and you have to explain it. So that process of giving an account is a kind of rendering stewardship. You are rendering stewardship to the public who owns the money, because they are the owner of the money and the owner of the project. Have I been able to answer your question?
Yes, sir.
All right. Okay. So move ahead. The main objective of public sector accounting, these are the main objectives of public sector accounting: determining the legitimacy of transaction and their compliance with the statutes and accepted norms. Because in the course of this class, you will know what are statutes. Statutes are laws promulgated or made by the National Assembly, regulations, laws, standards, circulars, policies made by various authorities in the public sector. So one of the objectives is for you to determine the legitimacy of transaction and their compliance. So those transactions that you carried out in the public sector department, agency, or ministry, did they comply with the legitimacy of those laws? Does the transaction comply with the legitimacy of those laws? Does it comply with the statute? Does it comply with the accepted norms? When you talk of accepted norms, you are talking of ethical issues. Was it ethically executed, or was it corruptibly executed? You can execute a project, but in a corrupt manner. You can also execute a project in an ethical manner. So this is one of the objectives of public sector accounting. Another objective is that it provides evidence of stewardship. You have already asked me this question. In the process of you presenting the accounts, there will be question and counter questions. There will be question and counter questions. So in the process of you answering the question, you will bring out evidence to show if the panel that is interviewing you are in doubt. You have to bring out the evidence. Okay, this is the account. Okay, this is the receipt of the procurement. This is the receipt. Okay, the asset is located at so place. The vehicle we bought, they are at the garage, or the BRT buses that we bought, they are parked at the BRT garages. So those are you providing evidence of what they would, because they need to see the tangibility of what you did. So another objective is that it's assisting in planning and control. It assists in planning and control, because when you put all you do in form of an account or in form of a report, this can be used for planning purpose. It can be used to plan for the next year's budget. They have known what was spent in health, what was spent in education this year. So that can form a basis for planning for next year's health budget or education budget. So another objective is that it helps in evaluating the cost incurred and the benefit derivable. So yes, in the process of executing public sector job, you incur costs. So when you incur costs, at the end of the day, did people really benefit from that project? Lagos State is trying to do, is it a red line, a railway line, or blue line and red line? That's railway line or metro line that will run from Badagry maybe to Ikorodu and crossing the place. So at the end of the day, cost is being incurred to procure all this equipment. So how do we weigh the costs and the benefits of this project? So public sector provide an avenue for us to evaluate the cost of procuring those rail equipment and the benefit that the people will get. Some of these benefits, I've said in this slide, that some of these things are intangible. It makes it difficult for us to measure the performance, because some of the benefits are intangible, you cannot really quantify it. But public sector we still find a way of evaluating the cost and benefit analysis. So these are the objectives of it. Then we move to characteristics of public sector accounting. Characteristics of public sector accounting. What are the characteristics? A, there are distinct aspects of accounting information, classification, and procedure, which apply only to transactions made by government. Examples are the budgeting system and applicable procedures, fiscal policy, accounting methods, and sources of revenue. So the peculiar nature of government transaction makes it desirable and indeed mandatory to treat them in accordance with specific but cohesive and standardized measurement approach and rules. So these are the character of public sector accounting. And the character has to do with the way their own budget runs, the way they run their own budget system is different from the way private sector run their own budget system. So if the examiner asks you, what are the characteristics of public sector accounting? You can talk of their budgeting system is different. then applicable procedure, the fiscal policy. They have a fiscal policy. In every year, they will always come up with fiscal policy that will guide their operations, which is also different from the private sector. So the accounting method is also different, and their sources of revenue are unique to them. So this makes it peculiar in nature to government transaction. So, and they have to be treated in accordance with specific and cohesive standardized measurements and approaches. So this is one of the characteristics of public sector accounting. Then another characteristic is that in view of requirement to obtain legislative approval for government revenue and expenditure, budgeting largely determines the structure of public sector accounting. So here now that you can't spend anything outside the budget. If you have to incur cost, first of all, they will find out that is this thing budgeted for? Is it budgeted for? So if it is only budgeted for, that is only when you can make expenditure in that heading. So if it's not budgeted for, if you do that, you might find yourself in the prison because you have committed a crime. So the government sometimes finds it necessary to aggregate its resources into specific or special purpose compartment. A setup of receipts and expenditure known as funds, the method of accounting adopted in recording and measuring the fund is referred to as fund accounting. So the another characteristics of public sector is fund accounting. Fund accounting. All their activities are being funded as based on fund, unlike in the private sector. The private sector is not like that. So things are being put in the fund, in the funding. You will see development fund, infrastructure fund, this fund, that fund. So that is one of the characteristics of public sector accounting. So another characteristic is the peculiarity of government operation is that the accounting system is maintained on cash basis. So please take note of this unique characteristics I'm measuring. Another characteristic is that it is run on cash basis. There is only transaction involving the movement of cash come into reckoning. So when you are now recording the accounting transaction, it's only those that cash have exchanged hand. That is the one that you put in the books. That's when you put in the record. Although the approach has its inadequacies, the general practice to adopt the cash basis of accounting, all assets are written off as they are regarded consumed at the points they are paid for. So accordingly, government statement of assets and liabilities do not contain information on tangible assets, and neither is depreciation charge in revenue and expenditure. So when we are talking of cash, you won't see any item of government expenditure that relates to tangible assets and depreciation, because tangible assets always goes with depreciation charge. So you won't see something like that. So everything is being charged into revenue and expenditure account. Revenue and expenditure, because it's cash basis. It's cash basis. But this method is being jettisoned. This basis is being jettisoned. We are now being migrated to accrual basis, just as it is being done in the past, more robust, that have been operational for a very long time, public sector. So we move to, do we have any questions so far before we move ahead? Hello, do we have any question?
No, sir.
Okay, so we move ahead. We move to users of public sector accounting. Users of public sector, who are the users? Who are the users of those accounts that is produced by the government? When you hear public sector, you are always talking of government. Users of government accounts. Users of government accounts. Who are they? Users. We have the internal users and we have the external users. So who are the internal users? We have the labor union, members of the executive arm of the government, top management members. So who can mention one of the labor union that you know in this country? Talk to me. My class is interactive class. It's not one-sided. Mention one of the labor union that you know in this Nigeria. Who can try?
The ASU.
ASU, yes. Clap for yourself. ASU is one of the labor unions. So they are the users of government. So if government says they don't have money to pay them, they already have the account of government. They have the revenue account. They have the expenditure account. So they cannot hide anything from ASU. ASU will know it. If they are lying, ASU will know. So if you say you don't have money, ASU, they know that, okay, we can get information from this account. So what are members of the executive arm of government? Who are members of the executive arm of government? Talk so that we move fast. Example of members of the executive arm of government. Because those are the people that is implementing the government project. We don't know. Okay, how many arms of government do we have?
3.
Eh?
3.
Okay, can you mention them?
The executive
The judiciary.
and the legislative.
Legislator, okay. So in these three now, who are the executive? Who will you say they are the executive in one of these arms?
They are the law. Are they the lawmakers? What of it?
Who is talking there? Are you talking to me or you are talking to somebody else?
No, sir.
Okay, I said you have mentioned three arms of government. There I said, give me an example of the executive. Who are the executive?
They are the carriers of the law, like they carry out the.
They execute the law, Abi. They execute the law, is it not? Are you hearing me?
Yes, sir. Yes, sir.
Okay, the executive are the governors. President of Nigeria. President of Nigeria is an executive. Governor of a state is an executive. Chairman of local government area is an executive. An example of an executive arm of government. Those are the examples. Then the legislators are those that makes laws. Those houses of assembly, National Assembly, state houses of assembly, those are the legislatures. Then give me an example of the judiciary then. I've mentioned everything. Give me an example of a judiciary. Who are the judiciary?
They are the
Judges-
lawmakers.
Hmm?
They are the lawmakers.
No, lawmakers are the legislators. I've just mentioned them. The legislators are the lawmakers. That is National Assembly and State House of Assembly and Local Government Assembly. They are the lawmakers. So who are the judiciary?
Like
The
the
one that
Implement the law.
they
You said?
defend the law.
Who are the judiciary?
They are the implementators of the law.
Implementators of the law. The
They
judiciaries
defend
they are the
the-
judges, they are the courts. The judiciary is the court and the judges, the judge, maybe the chief judge of Lagos State, chief judge of the chief justice of Nigeria. Those are the judiciary.
Yes, sir.
So read your book more. So external users are members of the legislature again, because why they put them here again is that, okay, you can see in the internal user, you see, you only see the executive arm there. You see the executive arm because they are the people that make the budget. They are the people that draw up the budget and the people that are spending, approving and spending the budget. So why we put the legislators as external user, they are not the one drafting the budget. They are not the one expending the money. Their own is just to make, the executive will just make the budget and take it to the legislature to approve it, to pass it into law. So legislature here, they appear as if they are an external person, but they are still part of government. Their role is just to checkmate. Their role, the legislative role is to checkmate what the executive have done. So that is why you cannot count them as as internal users. They are part and parcel of government, but you cannot recognize them as internal users because of their role. They play a checkmating role to the executive. So other users are the members of the public, researchers, and financial journalists. Financial institutions like schools, government, apart from the ones reporting, suppliers and contractors, foreign countries and foreign financial institutions such as International Monetary Fund and World Bank. The examiner can ask you all this question. Please take note. So the concept and principle applicable to public sector accounting. What are the concepts? What are the concepts? So the concepts have been defined as broad basic assumptions. So concept here means the assumption statements of the public enterprise. So public sector accounting is an integral but separate branch of financial accounting, sharing many concepts and principles applicable in private sector. So these concepts include materiality. What's supposed to be there? M is missing there. Supposed to be materiality, periodicity, duality, entity, historical cost, and going concern. So let me take it one by one. Materiality is that omission or commission that can mislead the decision or error to the type of user of the financial. Appropriate decision is called, it has a weight. Hello, are we there? Are you hearing me?
Yes, sir.
Yes.
Okay, sorry, because the network went off. So I was trying to explain materiality. Any error that will carry weight that will make the financial statement to mislead the user is known as materiality. So when we talk of periodicity, we are talking of period to period. When you are talking of financial statement, you will say you are preparing the financial statement or statement of profit and loss of Alimosho local government for the year ended 2021. That is periodicity. It's shown the period of that account. It's shown the period in which that account was prepared. That is periodicity. Historical cost. Historical cost means maybe an asset was bought, like these railway batches that are being bought now, railway batches in Lagos are being bought. The day that those transactions were made, invoices were raised, receipts were given to Lagos State government. So in 10 years to come, those receipts are being kept. So those receipts are a kind of historical costs. Historical, so you can refer to it. Anything historical is something that you can refer. You can look backward and see the evidence about it. That is what is called historical cost. Something that has happened so many years back that still have an evidence to refer to. So that is historical cost. Then going concern. Who can explain this one? Who know what going concern mean?
Going concern.
Yeah, go ahead. I wanted to say something now. You have forgotten, Abi.
Okay, sir. Okay, sir. Going concern. This simply means that the entity of the organization does not have any future plan on ending the business anytime soon.
Yeah, very correct. The business will not the business will not liquidate, or the business will not wind up. So the business will continue to operate. So till infinity. So that is the meaning of going concern. Thank you so much. So who made that contribution? Who was that? What is your name?
Elizabeth, sir.
Elizabeth, okay. All right, you've done well. Okay, so we move to the basis of public sector accounting.
Sir,
Yeah, okay.
please, that materiality, come again.
Okay.
I didn't hear you.
Materiality. With materiality is that any error or misstatement in the financial statement, any error or misstatement in the financial statement of a public sector or in the financial statement of a private sector account that will make the user to make a mistake of judgment that will mislead the user. You know, users of financial statement, they are to use it for decision making.
Yes, sir.
So if there's an error that will make them, because when you present a financial statement, somebody now use it to make a decision. But in the financial statement, in your financial statement, there were errors there. So if it was now later discovered that there was errors, so that error to the amount of what was misstated is what is called materiality. So that error is material to the financial statement. It's material to the figure is material to the. Okay, as an example is that as Lagos State is procuring railway batches now, maybe during the preparation of the account, one of the Lagos State staff, maybe each of the coach is costing $3 million. Each of the cost is costing $3 million. Then one of the Lagos State staff maybe was rushing, maybe work was pressurizing him. He now was recording it as $3 million, $3 million each. and they now use it to now compute the financial statements. So if it was 20 coaches times 3, how much would that be?
60.
60. Okay, that means it's 60 million now. Then the original price that was bought, that was played down, I was saying $30 million, Abi. Okay.
Yes, sir.
So $30 million times 20, is it 20 I said, or 30? Okay, I said $3 million times 20, Abi,
Yes, sir.
which is 60, Abi.
Yes, sir.
Then $30 million times 20 is how much?
$60 million. No, $30 million times 20.
Hmm. $600 million. Okay,
Yes, sir.
you can see the difference. One is stating $60 million, and what the actual amount that's supposed to be there, supposed to be $600 million, and somebody is now writing $60 million, and somebody has used that to make a decision. So that is what materiality is all about. Do you understand? Do you understand now?
Yes, sir.
Okay. All right. So we move to basis of public sector accounting. Basis of public sector accounting. So the basis are, I've already explained cash basis to you. One of the basis is cash basis, then modified cash basis, modified cash basis. Then we have accrual basis, and we have modified accrual basis. Then we have commitment basis. There are five bases. So it's examiner delight. Examiner might test you on this. So don't say I didn't tell you. So we will take them one after the other. Cash basis, and explain it. It is the basis of accounting under which revenue is recorded only when cash is received. Any expenditure is recorded, revenue or expenditure is recorded only when cash is received, and expenditure is recognized only when cash is paid. This is an example of a cash-based type of accounting in the public sector. So the advantage of cash-based include the following. What are the advantages of this type of method? It is simple to understand. It eliminates the existence of debtors and creditors, because it doesn't give room to who is owing you, and who do you buy things from credit, because it's only cash that you recognize, that you record. So it permits easy identification of those who authorize payment and collect revenue. Then another one is allow for comparison between the amounts provided in the budget and that which was spent. E is that it saves time and easy to operate. So what are the disadvantages of cash basis? It does not provide for depreciation, as I said, because asset is not recognized. Asset is being recorded as an expense. Asset is being recorded as an expense, as an expenditure. So it's not asset, you won't see any item that we will see that this is a fixed asset in government accounts. We will see that if it is done under cash basis. So it does not provide for depreciation since assets are written off in the year of purchase. So it does not convey an accurate picture of the financial affairs. So this cash basis does not give the true position of the financial affairs. No, we are dealing with disadvantages here. So the basis cannot be used for economic decision. The basis, cash basis cannot be used for economic decision. So those are what you need to know about cash basis of accounting in the public sector. Then modified cash basis. Under this basis, the books of account are left open for a maximum of 3 months after the end of the year to capture substantial amount of income or expenditure or expenses relating to the year just ended. You know, when the year ends, there are some other transactions that are not really concluded, that have not been finalized. So by December 31st, accounts has technically ended, but the books are not closed yet. The books are not closed yet under this modified cash basis. So the books is open up to like 3 months, like March, end of March, to capture all those transactions that was not concluded in December. So by the end of March, the book will now finally closed. The book would have finally been closed. So that type of accounting is what is called modified cash basis. Modified cash basis. So we move to accrual basis. We move to accrual basis. Under this basis, revenue is recorded when earned and expenditure acknowledged as liability when known or benefits received. This is totally the opposite of cash basis that we look into. Immediately you know that a revenue has been earned, whether you have received the money or not, you will quickly record it in the books, whether you have received cash or not. When once you earn that revenue, it has to find itself in the books. So also the same manner, expenditure is acknowledged as liabilities when known or benefit is received. So when you receive benefits for an expenditure, maybe you have not paid the money yet. You have not paid money yet for the expenditure, but you have started enjoying the benefit of it. You have to record it as an expenditure. So that is an example of accrual basis of accounting. Accrual basis of accounting. Notwithstanding the fact that the receipt or payment of cash have taken place wholly or partly in other accounting period. So at times, most of this accrual, it can be partly or it can be fully recognized. It can also be partly recognized. Recognized portion by portion as you begin to enjoy it, whether you have given cash or not, until it is fully enjoyed. But the essence is that it is being recorded, whether it's partly enjoyed or fully enjoyed. Unlike cash basis that you wouldn't have recorded it because you didn't collect cash. So accrual basis is practiced in the private sector and all parastatals such as Central Bank of Nigeria, Federal all concerned are profit-oriented. We've mentioned this before. It is therefore necessary to estimate how much profit has been earned in each period with a view to keeping invested asset intact and making periodic distributions to shareholders by way of dividends. However, the main consideration in the public sector is improvement in the standard of living of the citizens. So this accrual basis, most of the public sector now, they are now adopting the accrual basis of IPSAS. They have left the cash basis because of the disadvantages that I've told you. As it was in this slide, you can see the disadvantages. So we move to advantages of accrual basis. It takes a realistic view of financial statements. It's more realistic. It reveals accurate picture of the state of financial affairs at the end of the period. It could be used for both economic and investment decision. This advantage of cash of accrual basis can be the disadvantages of cash basis. So they can be the disadvantages of cash basis. Take note of that. it aligns with the matching concept, and it makes allowances for diminution in the value of assets used to generate the revenue of enterprise. So what are the disadvantages? It's very difficult to understand, especially by non-accountants. It does not permit easy delegation of work in certain circumstances. So we move to modified accrual basis. Modified accrual basis. Modified accrual basis. This is the basis under which revenue is recorded when received and not earned. So where expenditure is recorded once its liability is incurred, it means that cash basis is used for recording revenue. So do you know the difference between modified accrual basis and cash basis now? Are you there?
Yes, sir.
Okay. How can you relate this modified accrual basis to cash basis? How do they relate? You have been following me.
Sir,
Yeah.
under cash basis and modified accrual basis, revenue is recorded, is both recorded when it is received and not when it is earned.
Okay. Yes, that is what they have in common. You are correct. So an aspect of cash basis is being implemented here. It's only in the expenditure aspect that is not recorded. So you are correct. So the modified accrual basis operates as follows. Revenue is recorded when cash is received, except for revenue which is susceptible to accrual, and revenue of a material amount which has not been received at the time it should. So expenditure is recorded on accrual basis. So in modified accrual basis, expenditure is recorded in accrual basis, while revenue is recorded on cash basis. So that is what you should know. Disbursement for inventory items which may be considered as expenditure at the time the items are utilized. And B, interest on long-term debt commonly accounted for in debt service fund and recorded as expenditure on its due date. So these are the features of modified accrual basis. Then we move to commitment basis. We move to commitment basis. So this is the basis that record anticipated expenditure evidence by purchase order in public sector financing. Budgetary and accounting system are closely related to the commitment basis. So in this kind of basis, items are recorded in anticipation. So if you want to spend money in 3 months' time, you want to spend money in 3 months' time, or may have a training for public sector staff in 3 months' time. So you can record it now. You can record it now. So that is a good example of commitment basis of accounting. So it can be recognized now, though you are going to spend this money in 3 months to come. So, or if not training, if you want to buy an item, you can record it through, you can send or raise a purchase order. You can raise a purchase order in advance and recognize it as an expenditure, even when the time to incur this expenditure has not really featured, has not really come. So advantages of commitment basis is that commitment account kept on a memorandum basis have several advantages. A is that a separate payment tabulation is available when required. Separate payment tabulation is required, is available when required. That is an advantage. Adjustment occurring when actual expenditure has been obtained does not affect the final account. So whether you have made adjustments or you've not made adjustment, once you make a commitment and you have recorded, you are not going to, it does not have to affect the outcome of your final account. So you make sure that what you have recorded in the first instance is correct. So C is that it is an aid to financial control. It aids financial control. The commitment is regarded as a charge which has, remember therefore that whether you are spending the money in 3 months' time, it must have been in the budget in the first place. It must have been budgeted for. So when you expend it in advance, it is assumed that you have expended it. So that is it. So it takes a realistic view of financial transaction as another gain. It reveals an accurate picture of the state of financial affairs at the end of the period. So those are the advantages of commitment basis. Then let's look at the disadvantages. So the system of commitment basis of accounting has the following disadvantages. A, the system involves extra work. There's extra work that's actually done to finally determine the running balance under which the subhead of expenditure is made. So it involves extra work. So if you say it involves extra work, you should be able to go ahead and explain it to the examiner. B is that there are over expenditure and under commitment basis. There is over expenditure under commitment basis in the expectation that government may finally release funds to settle the legal obligation. So this commitment basis can give room for over expenditure. You can just go ahead and, since you know that you are recognizing it in advance, you can be reckless in spending, bearing in mind that at the end of the government will release money to cover it up, to cover those advanced expenditure that you have made. So that's a very good disadvantage. So at the year end, all commitments that are the subject of unfulfilled orders will have to be written back to reflect the exact picture of the transaction which took place during the year. So in this point now is that at the end of the year, all commitments that are the subject of unfulfilled, some of these commitments that you say you spend, at the end of the day, it might not, it maybe was not implemented after all, but you have already recognized it as an expenditure. But when the time comes, and as an example that I've given for training that would have happened in 3 months' time, maybe this commitment basis, the training is supposed to happen next month, December. You have already recognized the training in your books. Then December comes, maybe something happened. Because of the festivity, because of Christmas and everything, there was no time to even hold the training. And the financial year has lapsed by 31st December. So you have to now write back the book again. You have to write back the book to eliminate those ones that were not fulfilled. So that is a big disadvantage because it's causing a double work, so to say. The balances which ought to have been lapsed in the vote book at the end of the year may be spent by issuing local purchase orders to exhaust them. So under this commitment basis, if there are balances, maybe between December, you know that the accounting year end is getting closer, and you are still having balances, huge balances. You will look for a way to push those balances into, so that you will spend it to exhaust the balance. So that is a disadvantage of using this type of method. So I've been able to really explain the basis of accounting in public sector. I hope you are still with me over there.
Yes, sir.
Okay, are you enjoying the class?
Yes, sir.
Okay, good to know. So we are moving. We are talking of, when we started, we said public sector accounting is more of a non-profit making organization. Public sector accounting or government sector, they are more of non-profit oriented. So this slide now, we are trying to compare a non-profit oriented organization to a profit oriented organization. So the examiner may ask you, in terms of profit, you should see that the main objective is to provide adequate welfare to the people at reasonable cost. This is under non-profit oriented organization, which is government organization. In terms of profit, they are not to make profit, they are to provide adequate welfare. But for profit organization, the main objective is to maximize profit. Then in terms of revenue, for public organization, revenue is derived from the public in the form of taxation, fines, fees, etc. But for profit-oriented organization, revenue is obtained from income, principally from sales of goods and services. Then under non-profit-oriented organization, when we talk of legal information, for legal information, they are created by act of the legislature and national state assemblies. So legal information is created by these organs. Then for profit-oriented organization, registered with Corporate Affairs Commission. So it has to be registered with Corporate Affairs Commission. For budget, in public is more interested in the annual budget than the annual report. Then for profit-oriented, the public is more interested in the annual report than the annual budget. Please take note. In budgetary approach, for public-oriented company, public entities are rigid in the budgetary approach. Very, very true in government setting. But in private sector, budgets are internal affairs of those organizations. In accounting, they are strictly, in the public sector, they are strictly operate on international public sector accounting standard, IPSAS, cash or accrual. They operate substantially on fund accounting. I've explained this before. For private-oriented company, they strictly operate on international financial reporting standard, IFRS. The proprietary approach is adopted for their funding. Then annual general meeting, there is no annual general meeting, but the government can hold public briefing on specific issues. No annual general meeting. But in public, there is what they call public hearing. So for private-oriented, there is annual general meeting of the stakeholders, of the shareholders, to discuss the performance of this organization. Then the solution, when you are to end the enterprise, under non-profit-oriented, which is government, what do they do? On the solution, any income raised or asset acquired cannot be distributed or benefited members or directors or officers of the organization, because all the proceeds must revert to the state. You cannot share the proceeds. You get it back to government fund. Then for private-oriented or profit-oriented, income realized on the solution can be distributed for the benefit of members, directors, officers of the organization, or shareholders of the organization. So this is a beautiful question that the examiner can ask you. Please take note. So we move to professional pronouncements in public sector accounting. What are the professional pronouncements? We've looked at the documents. We are still looking at the documents. It's part of the document. So IFAC is the global organization for the accounting profession dedicated serving the public interest by strengthening the profession and contributing to development of strong international economics. Founded in 1977, IFAC is comprised of 173 members and associates in 129 countries and jurisdictions, including Nigeria. The mission of IFAC is to serve the public interest by contributing to the development, adoption, and implementation of high-quality international standard and guidance. 2, contributing to the development of strong professional accountants. 3, promoting the value of professional accountants worldwide, or speaking out on accounting public interest issues. Who can tell me the full meaning of IFAC here? Well, are you still there? Are you with me?
Hello, sir.
Yeah.
Right.
Okay. Who knows the full meaning of IFAC?
International Federation of Accounting Commission. Accounting.
You get it now. International Federation of Accountants.
The accountants.
It's IFAC. So you got it. So we've mentioned their duties. Remember their duties, what their roles are. Then what are the due process when it comes to we now move to International Public Sector Accounting Standard Board. International Public Sector Accounting Standard Board. The IPSASB, formerly Public Sector Committee, PSC, is a board of IFAC, formed to develop and issue under its own authority International Public Sector Accounting Standard, IPSAS. IPSAS are high-quality global financial reporting standard for application by public sector entities other than government business enterprise. So the objective of IPSAS, the main objective of IPSAS is to serve the public interest by developing high-quality public sector financial reporting standards. So IPSAS are the authoritative requirement established by the authoritative publications, including studies, research, reports, and educational papers that deal with public sector financial reporting issues. B, membership of the IPSASB. The IPSASB consists of 18 members, of which 15 have drawn from IFAC member bodies, and the remaining 3 are public members with expertise in public sector financial reporting. The IFAC board, on the recommendation of IFAC nominating committee, appoints all members of IPSB, including the chair and the deputy chair. So the long and short of this is that this board is saddled with the responsibility of producing International Public Sector Accounting Standard, IPSAS. So once you hear IPSAS, this is the board that produce those standards. And these are the standards we use in the public sector accounting. If it is in the private sector, which standard do we use? If it is the private sector, which standard do we use? I'm throwing the question back to you. Somebody saying something, Abi? Yes, go ahead.
So is it IFRS?
Yes, yes, you are correct. You are now asking me again, but you know it. It's IFRS in the public sector, International Financial Reporting Standard. So please take note of all these things. So the due process, IFSAS adopt the process for development of IFSAS that are provided the opportunity for comment by interested parties, including IFAC member bodies, auditors, preparers, including finance ministries, standard setters, and individual priorities. IFSAS due process for project normally, but not necessarily takes the following stage. So these are the process: study of the national accounting requirement and practice, and exchange of views about the issues with national standard setters, consideration of pronouncement issued by the International Account Standard Board, national standard setters, regulatory authority, and other authority bodies, professional accounting bodies, and other organizations interested in financial reporting. So these are the process that IFSAS use in producing those standards. Like in the national standard setters in Nigeria here, we have Financial Reporting Council of Nigeria. And for C, which is professional accounting bodies, we have ICAN as a member of the professional body that can contribute their quota to the formulation of a particular standard that IPSASB might wish to produce. So those are the things. So consideration of pronouncement issued by, what they still do further is to consider pronouncement issued by the International Accounting Standard Board, national standard setters, regulatory authority, and other authority bodies, professional accounting bodies, other organizations interested in financial growth, then formation of steering committee, project advisory panels, or subcommittees to provide input to the IPSB on a project. 5, publication of the exposure draft. So when all these people have made contribution, they will now publish the exposure draft for public comments. They circulate it for public comments, usually for at least 4 months. The exposure draft will be in circulation for 4 months. So this provides an opportunity for those affected by IPSB pronouncement and are finalized and approved by IFSAS. So the exposure draft will include a basis for conclusion. Then IFSAS will come out clean and clear. So I hope you've seen the process. Examiner can tell you to narrate the process, so you don't tell us that you didn't know. So we move to the document part of it. The second part of the class. So the Nigerian Constitution. The Nigerian Constitution, the 1999 Constitution of the Federal Republic of Nigeria as amended, is one of the legal framework that regulates the receipt and disbursement of public funds. So the section of the Constitution quoted below are authorities on receipt and payment procedure of governments. So the allocation of revenue, the audit of public accounts, and other financial matters. Some specific sections of the Nigerian Constitution and their provision are listed below. It's not all, so you can still go and read from other sources. So these are the sections and their details in the Nigerian. Section 880 to 120, establishment of consolidated revenue fund. Section 80 to 120 talks about establishment of consolidated revenue fund. 81 to 122 talks about authorization of expenditure from the consolidated revenue fund, CRF. 82 to 122 talks about authorization of expenditure in default of appropriations. So if you are not following the law, the budget that have been signed, have been enacted, so that is a default. Then 83 to 123 talks about the establishment of the contingencies fund. 84 to 124 talks about remuneration of statutory officers. Statutory officers are like the accountant general, the auditor general, the minister of finance, the permanent secretaries, and so on. So 85 to 125 talk about audit of public accounts. Audit of public accounts. 86 to 126 is appointment of the auditor general. That is the constitution. Talks about appointment of the auditor general. Then 87 to 127, tenure of office of the auditor general. 88 to 128, power to conduct investigation by the legislatures. 89 to 129, power as to matters of evidence. 49, declaration of asset and liability and oath of office. 153, list of statutory commissions. The list are many. So this is just an extract of the Nigeria Constitution. So another document that is important to us is the Finance Control and Management.
Sir.
Yeah. Okay.
What do you mean by contingency? Contingency fund.
Contingency fund, a kind of emergency fund. It's a fund set aside for emergency. Like, you know, there was flood in Nigeria across the states. So such fund, if it was established, you can now draw money from there to use it to send relief material or to rescue the people that are being affected by flood. So it's an emergency fund. It's not, it's a fund that is set aside for emergency purpose. Did you get it?
Yes.
Okay.
Sir,
Okay. Yeah.
the Auditor General, is he a part of the statutory officers?
Yes, it's a part of it. It's part of it.
Okay, sir.
The Accountant General is part of it. The Minister of Finance is part of it.
Okay, sir.
So we move to Finance Control and Management Act of 1958. This is a very old law. So this governs the management and operation of government fund. It regulates the accounting system, the books of account to be kept, and the procedure to be followed in the preparation of accounts and financial statements. Some specific section of this act and their provisions are listed below. Sections and details. Section 3 talks about legislative control and management of the public funds. So 5 talk about management of consolidated revenue fund. 6 talks about authorized issue from the consolidated revenue fund. 7 talk about erroneous receipt. 8 talk about losses. 9 authorization of investments. 10 investments, that's general procedure. 11 income of investments, general. There are more like this. This is just an extract of it. So this is the document that spells out what to do with management of consolidated revenue fund. Then authorization issue from the consolidated revenue fund. So if you are to move money from there, this is the document that give you the guidelines. So another document is the Annual and Supplementary Appropriation Act. This is the budget, annual budget that have been passed by the whether National Assembly or state houses of assembly. year in and year out. So money bills, when passed into laws, become appropriation acts. That is called money bills. So this includes the payment or withdrawal from the Consolidated Revenue Fund. Appropriation acts are passed yearly for the release of public money so as to render service in the years to which they relate. So appropriation acts may direct a change in the way of operating any fund, apart from the contingency fund and the Consolidated Revenue Fund. So this is annual supplementary appropriation act. It's a document. When that budget is signed into law, it becomes it becomes a public document which you have to follow. So if you are not following it judiciously, that means you have committed an offense. So that is one of the important documents. Another important document is Fiscal Responsibility Act 2007. Fiscal Responsibility Act 2007. What does it stipulate? This act provides for prudent management of the nation's resources and ensure long-term macroeconomic stability of the national economy. It secures greater accountability and transparency in fiscal operations within a medium-term fiscal policy framework. This act also established the Fiscal Responsibility Commission to ensure the promotion and enforcement of the nation's economic objectives. So the act emphasized the preparation of medium-term expenditure framework, annual budget execution, collection of public revenue, public expenditure, debt, and borrowing. So examiner can ask you to state components of Fiscal Responsibility Commission. What are the components? What do they promote or what do they enforce? What are the enforcements of Fiscal Responsibility Commission? You can mention that they emphasize the preparation of medium-term expenditure framework, MTEF. They emphasize preparation of MTEF. They emphasize preparation of annual budget and budget execution. They emphasize collection of public revenue. They emphasize on public expenditure, debt, and borrowings. I hope you will remember this. Will you?
Yes.
Yes, sir.
Okay. So I've mentioned like up to 4 documents now for you. So, you know, this is a West African examination. As we talk of Nigerian Constitution, we are also talking of Ghanaian Constitution. So Ghana is also sitting for this exam. I think Syria alone and one other country, about 6 or so. So 1992 Constitutional Provision of Ghana, Chapter 13 of the 1992 Constitution of Ghana gives the authorization for the generation of the country's revenue and stipulate that the nation's Auditor General shall prepare and forward his report to the National Assembly within a specified period of time. So Ghana Financial Administration Act is another important document. Ghana Financial Administration Act. I mentioned 2 documents under Ghana now. Constitution of the Ghana, Constitutional and Legal Provision in Ghana. Then Ghana Financial Administration Act, number 650 of 2003. So this Act and Financial Administration Regulation of 2004 provide the legal basis for authority, while the accounting manual and departmental accounting instructions give the operational guidelines. Chapter 13 of Ghana's Constitution of 1992 dwells on the finances of the country. So these are important documents. The documents are many, they are up to 15, but I just make a selection of some of them because because of our time, because we are to spend 2 hours in a class. So I've taken you through all this. So before we move to quiz, do we have any question? Do I have any question from you? You have any query? You want to query me?
Yes, sir.
Assist Lucio and Elizabeth. You want to query me, Abi? Yeah, go ahead and query me.
Sir, in the exam, sir, can you hear me?
Yes, I'm hearing you.
In the exam, are they going to ask us any question in relation to Ghana?
Yes, they might. They might ask you. So if you come across anything concerning Ghana, so you read it.
Okay, sir.
It's West Africa, something's on. It's ATSWA, Accounting Technician Scheme, West Africa.
Okay, sir.
Are you getting me now? So it's not a
Yes,
Nigerian
sir.
paper. It's an international paper, international exam. But the question, 80% of the question is Nigerian question anyway. So don't be scared. So just a few minor questions from outside.
Okay, sir.
All right. So any other question? Okay, so let's take some quiz. Which of the following is the cash basis of accounting record from the stages through which a spending decision passes? Which of the following is the cash basis of accounting records from the changes through which a spending decision passes? A, management decision to spend money. B, issue of order of contracts for the supply of goods and services. C, supply of goods or services acknowledgement of liability. D, settlement of amount of goods or services received. E, consumption of value. So which one? So quiz 2, the basis of accounting under which the books of accounts, are kept open for a maximum of 3 months after the end of the year, so as to capture substantial amount of income or expenditure relating to the year just ended, is dash.
Modified cash basis.
Modified cash basis. Clap for yourself. Okay. All right. So one of the following is not part of other laws and regulations guiding public sector accounting. Revenue Mobilization and Fiscal Allocation Commission Act, Pension Reform Act, Companies and Allied Matters Act, Code of Conduct, Bureau of Tribunal Act, Financial Reporting Council Act.
C.
One of the following is not part of other laws and regulations guiding public sector accounting.
C.
C, Companies and Allied Matters Act. Are you sure? It's correct.
Yes, sir.
Clap for yourself. Okay. So the Nigerian public sector finances and other related laws, such as the Constitution of the Federal Government of Nigeria and some other laws, guide matters. List any 10 of such laws. This one you will do it in your house there. I've told you that the laws are many, the documents are many, so I only selected like 6. So list it and send it to the platform. Share you are on the platform, Abi, PSA platform.
Yes, sir.
Okay. So you will, okay. Who is talking to me? Elizabeth, Abi?
Yes, sir.
Okay, Elizabeth, invariably you are the governor. So you post this question on the platform.
Okay, sir.
then people will they can send their answers there. This particular quiz 4.
Okay, sir.
All right. Did you see it? You have gotten. You can get it now from the slide. The slide is also pasted there.
Yes, sir.
So you can copy this question and paste it on the platform. You understand me?
Yes, sir.
Okay. So for this question 1, which one did you pick? You didn't know it, Abby?
Cash bills of accounting. I don't know, sir.
Okay. Should it also be as an assignment?
No.
Please,
Shouldn't be. It shouldn't be an assignment. You want me to do? You want me to do everything? Okay. I'm coming over.
ẹ̀rí pé títí ìlú ní ìmọ̀ nǹkan tó ṣẹlẹ̀ o ló bá kú lẹ́ẹ̀kan náà nígbà tá à ń ṣe kéré class ní gbogbo ojú ẹ̀ ló ṣó iná ni òṣìṣẹ́ mo ṣe tètè lọ gbé tí nísìnyí gbogbo nǹkan tó ti kọ́ ní táìgbà ẹ̀ mo ti miss ẹ̀.
Hello, are we there? Hello?
Yes, sir. Yes, sir.
Yes, sir.
Okay. So what will happen that quiz 1 and 4, we will post it on the platform so that at least go through some scrutiny, go through and think. Then when we come back, we will solve it. Provide your answer. Are you getting me?
Yes, sir.
Okay. Or can you provide the answer now? Okay, post it on the platform. It's 1 and 4. But then you let members provide the answers.
Okay, sir.
So did you guys enjoy the class?
Yes, sir. We did.
You did. All right. So you put based in Lagos. You based in Lagos, Abi?
Yes, sir.
Yes, sir.
Okay. All right.
Thank you, sir.
So we have come to the end of our class. So let's prepare for our next topic will be standardization of federal, state, and local government reporting format in Nigeria. Standardization of federal, state, and local government reporting format in Nigeria. So have a wonderful weekend.
All right.
Bye-bye.
Bye.
All right, sir.
Right.